Good afternoon. I'm Rick Ackerman, editor of Rick's Picks, and today's session has been billed as a reunion. Many people who have been either subscribed to Rick's Picks in the past or who have also taken some of the courses that I offered are here. And part of the purpose behind this presentation is just to make uh, everyone aware of how the hidden pivot method has evolved over time, particularly those who have taken the course. This could have gone back to as early as well, more than 20 years ago. The hidden pivot course was originally taught live and all around the world, New York, Australia, Sydney, Vancouver, many places. And over time, the initial course was offered at $2,500 and it took 2 full days. And over those 2 decades, I've compressed the material. At some point, I decided that it was not possible to teach all the concepts really, and I made the hidden pivot course more, uh, I would say the basics, but it went well beyond the basics. We got into some pretty nuanced discussion in the uh, in the class, but it was left to the Wednesday tutorial sessions to really sort of bring students up to the master's degree or PhD level. And even now, that's more than ever that's the case. I put a lot of emphasis on the Wednesday tutorial sessions, and those of you who attend them regularly know that they're not intended as chalk talk. We actually look for trades. I know that it's most useful to students to actually see whether their instructor would pull the trigger. And I ask people who come to the class to come prepared to trade because we're going to find usually we'll look for good trades, but sometimes we'll force a trade, and there is that flexibility within the hidden pivot method to just trade at will, to get on a chart of any stock and say I'm going to trade long or I'm going to trade short. And with the different entry tactics that we use, there's always something to do. So the Wednesday sessions are where the learning takes place, and anybody who has taken the hidden pivot course, what I call the flagship course, which has all of the entry tactics, but also detailed information about the basics. I'll tell you a bit about that later. But um, it, uh, it contains all the tricks, and frequently I learn from my students during these sessions. Nothing is more useful than looking at real-time charts instead of getting on PowerPoint slides and saying, see, here's what we could have done or here's what we did. To get on real stocks, real charts where your entry points are determined, you're still in speculative mode. You really don't know how it's going to play out. I'll show you one trade that I did with my trading partner this morning that takes advantage of some of the newer techniques. But first, I want to show you the um, origins of the hidden pivot method, the uh, tar and sand from which everything evolved. A little bit about myself first. As you know, I'm the editor of Rick's Picks. I've been publishing for more than 2 decades. But before this, the predecessor was a product called a black box forecast. And that name was stolen from me when I was employed briefly by a trading school. I was never able to recover it. So anyway, I've been Rick's Picks for more than for 2 decades, and my trading experience goes back 4 decades. 12 of them were spent on the floor of the Pacific Stock Exchange, where I was an options market maker. Um, I've written on the markets for many publications, including Barron's, and I had a column for a few years in the Sunday San Francisco Examiner. Because of my options expertise, I occasionally did, I would take the striking price column when the usual author, a woman named Margaret Pacey, wanted to take off, but I also did occasional think pieces for Barron's, and most of them have been pretty much against the grain. A highlight of my trading years was the poison pill case, At the time, this would have been in um, the late 1980s. I was trading in a pit that featured Smith Klein as one of the key stocks, and there was news out one day that someone had put poison in Contact and Diatac capsules, which at that point were made by Smith Klein, and the stock Smith Klein took a huge dive. And it occurred to me, and apparently nobody else, that the poisoning had been done to drive the stock price down, because the person who'd put the rat poison in the capsules had called a couple of news stations and said, "Hey, look, there's poison in Contact and Diatac," and they found poison pills on the shelves in a pharmacy in Orlando, Florida, and Houston, Texas. Um, so um, I did a little sleuthing. I called the FBI initially, and I said, whoever called in those threats was just trying to drive the stock price down. And surprisingly, they didn't really pursue it with me. But I checked around the floor and did a little sleuthing of my own, and discovered that a couple weeks earlier, someone had come in and bought several hundred way out of the money puts. They were expiring in just a couple weeks, way out of the money. So it was someone making a bet for $6 an option. They were selling for a teeny then. They were making a bet that the stock would fall more than 20 points over a couple weeks. So I called the FBI again, and I just said, "Look, you got to find out who did that trade, and you got your guy." So I was very surprised when I didn't hear from them again. And I remember I had a blind date with a dentist, and it was in the news about the poison and pill business. It was headline news, and I remember telling this woman that, "Oh, sure, they're going to nail him," and it was and they didn't, or at least it seemed like they didn't. Then one day, a month or two later, I was late getting to work, just getting out of bed, and there was a phone call. It was the guys in the trading pit, just kind of breathlessly saying, "Rick, they caught the guy. They caught the guy." And and guess what? There's a $300,000 reward. So bottom line, they found that a guy named Eddie Marks had done the trade, and they found Eddie Marks's fingerprints on the bottle of Contact, and that led them quickly through their files. This guy had a history of petty crimes, and they sent him away for 27 years. I got 200,000 of the $300,000 reward, and we had a big party in Tiburon that featured Blazing Redheads and the James Harmon Blues Band, and it was a great blowout. Um, more important than the reward, it led me back to journalism, because Barron sent out Maggie Mahar. This was her first freelance story for Barron. She'd been teaching English at Yale University and wanted something more exciting to do. So Maggie did a story that ran under the headline, "The Case of the Poison Pill: How an Intrepid Trader Solved It." And my connection to Maggie led me back to journalism and my writing stint with Barron's. Um, I wish I'd known more. I'd known about hidden pivots back then, because when I was on the trading floor, I was clueless really. I just it was all seat of the pants trading, and if I'd had a few of the tricks that I have now, it would have been much easier. But I went out, left the exchange, and went to work for a private eye named Hal Lipsett. But I did so on a string of bad years, and I don't mean that I'd lost a little bit of capital over the few years. Bad year in the trading business means you can lose half of your net worth. So I left the exchange and kind of went into a period of darkness. When Hal Lipsett hired me, he paid me $5 an hour, but it was fun, and I worked as a headhunter and a few other jobs. But out of the blue, I renewed my connection to a fellow named Ira Tunick, who'd worked on the trading floor. Ira and I were worlds apart in how we viewed the market. He was an engineer and a construction guy. Uh, that his business had been home construction, and his approach towards system trading was much different from mine. But when he left the floor, he was looking for a good way to generate income from his nest egg, and he wanted something pretty reliable. So he spent a couple years uh, looking at various trading systems, and um, and he came up with something called the trident system, and we worked hard at it. I used to drive up from San Francisco to uh, Santa Rosa, where Ira lived, and just we'd sit there. He'd actually do the trading on his screen, and he'd work from something called a matrix. He is, as I mentioned, or was an engineer, and he used to use this matrix. It was a sort of coincident patterns that he was looking at, and it was as dense as a Shanghai bus schedule. But over time, I caught on, and we worked to improve the system. The process was similar to Woody Allen wrote a wonderful piece on how the sandwich was invented by the Earl of Sandwich. And initially, it took a while to get it right. You know, initially they started with a slice of bread between two slices of meat. And then someone thought, well, let's try cheese on the top and then meat on the bottom, and so on and so forth. So it took them a while really to get the meat and the cheese between two slices of bread. So Ira and I were similarly clumsy in our early attempts to get this right, but again, because he was, I guess, scientifically minded, um, it was easier to get to where we wanted to go. And at the time, uh, this was our holy grail. This is a trident pattern, and the system was developed by a fellow named Charles Lindsay. But Lindsay brought in Larry Williams to teach the trident trading strategy. And those of you who are familiar with Larry Williams know he's a very engaging guy, and you never go to a Larry Williams presentation without getting all fired up about, boy, this is gonna, I'm really gonna get rich. The only problem with Trident and I think it was this whole day course that they offered. It was a full day, and I think it was offered at around $2,000, which was a lot of money back in 1973. And so Larry Williams taught the Trident system, and the only problem with it is that it didn't work. I'm going to explain to you just briefly why, and uh, uh, in a psychological way of looking at this pattern. The ABCD pattern is really what we're trading here. And according to Lindsay's formulation, the trade begins first with an AB impulse leg, then a BC correction, and a CD follow through leg that, in under ideal conditions, will be equal in points to the AB leg. So the way the system worked specifically was you'd wait for the impulse leg, the AB leg, to unfold. And impulse leg is my word, not Lindsay's. But you'd wait for AB to happen, and then BC, a corrective phase, BC, and then you'd wait for the rally to resume again. And when you rallied from the low there, a distance equal to 25% of your AB leg, that's where you bought the stock. That's where you entered the trade, and you put a stop loss below C, and that's it. I don't, I didn't take the course because, so I don't really know how Larry made a full day of it, but that's basically how the system worked. And of course, you needed a pullback from B to end the impulse leg. You needed a certain amount of pullback, and it was equal to, um, uh, I guess it was, I think it was, excuse me, 0.618. Uh, I'm sorry, it was equal to a fraction of the last leg coming down to your point A, and the lower part of it was, well, that was called the window. The pullback had to get into the window to form a proper point C low. So that was basically it. But I'm going to explain to you exactly why it didn't work. Uh, Remember, I don't want you to see ahead of the cursor. Let's just pretend that we don't see anything to the right of my cursor. So you have this downtrending, ratcheting move down, and when it starts to rally up to here, your expectation is just for another move down. Your eyeball sees this pattern and it wants to repeat it, but in this case, it doesn't come down. It keeps going, going, going. And when this AB, what is about to become an AB impulse leg, starts exceeding prior peaks, you get that aha moment. You know, it looks like the downtrend has now changed to an uptrend. So by the time it gets all the way up here, it's pretty obvious that you've got a new shooter coming out. We have what I call, as I mentioned, an impulse leg. All right, so nobody wants to buy it up here because we've seen this thing come so far so fast that we want it to take a little bit of a breather before we jump in. So it's taking this breather in the BC leg. But of course, if we're typical traders, we don't want to buy this thing when it's still falling. We want it to make a low somewhere and start ascending again. So when it begins its ascent, we say, aha, the corrective phase is over. This thing has retraced and now it's in the throes of, well, we call it a CD leg, a follow through leg. But in any case, it's fulfilling the promise that got into traders' heads with this big AB impulse leg. So it starts to rally, and everybody thinks, okay, I think it's rallied enough that I'm pretty sure that the corrective phase, the BC, is over, so I'll jump in there. So let's say in a psychological frame of reference, everybody and his mother wants to get in at X. And that's the problem with the pattern. If everybody truly does get in at X, there's no buyers left. This thing sinks like a stone, stops everyone out below C, and then takes off like a bat out of hell. And one of the workarounds I used was to simply let it stop everyone out, and we put our new point C down here, and we do it the second time. And I still use that idea to an extent because the ABCD pattern is part of the vocabulary not only of most traders, but even of the algorithmic traders. It's as simple as it is. It's what they all use, and they all use the principle of the impulse leg in the same way that I do, a trend leg that starts surpassing prior peaks in an uptrend or lows in a downtrend. So that's the problem with Lindsay's trident. And the way I modified it to get around doing the obvious, getting in where everybody else did and then getting stopped out, was to trade against the trend. So instead of getting in here, we would get short at 196. And if you got to be a pretty good uh, trend reader, uh, you could essentially get in front of the cannonball there and catch it, and it would start down as you'd anticipated. But over time, I recognized that you had to be pretty good to stand there and just go against a strong trend like this and expect to make money getting short. And that's why I created an alternative, which I call camouflage, that you're going to hear a little bit, you're going to hear about a little bit later when I tell you how the system has evolved. So the biggest thing yet to be discovered was P. P happens to be the midpoint of the CD leg. And when I talk about hidden pivots, places where price reversals, trend reversals are likely to occur, there are just two of them. One is P, which I just said was the midpoint of your CD leg, and the other is D, the D target of your ABCD pattern. And even the corrective BC of your bigger uptrending pattern can have its own A, B, C, D characteristics with a P midpoint. And P has really gotten to be more and more important over the years. Um, it's you look at a system and you think, well, A, B, C, D, doesn't everybody see that? And if it means the same to everybody, how can it possibly, same thing to everybody, how can it possibly work? But we have idiosyncratic ways of seeing patterns and P's that do work. And when everything's clicking, um, you discover that there's a very key principle about P that makes reading charts much easier, or making tradable sense of them. All right, and the rule is that if you've got a dominant trend, in this case, the big trend on this chart is a downtrend. It's a bear market in Goldman Sachs, if you can believe there ever was such a thing prior to just January of this year. Um, and the idea is that if you have a big dominant downtrend, and I've labeled it with uppercase letters here, capital A, B, C, D, uh, the counter trend, and I've labeled that with a lowercase ABC, should fail at its P midpoint. And P is it's a very telling hidden pivot in this context, but also just in reading the trend and forecasting a target, because another corollary, another rule is that price action at P is descriptive or is predictive of price action at D of the target going either with the trend or against it. All right. So in this case, if this big bear market in Goldman was going to continue down, all the way down to here, we should see the corrective, the retracement, lowercase a, b, c, not reach its D target somewhere up there, but fail at the P midpoint, which is exactly what it did. And this was a great place to get short, by the way. So the P, the midpoint pivot, is a virtual cornucopia of useful trading information. And part of the evolution of the hidden pivot method over the years has been to make increasingly precise and profitable use of P. So I stopped making my regular trips to um, Santa Rosa and just kind of closeted myself, experimenting with the system. And Ira and I agreed that we were never going to tell anybody what I just told you about P, being the place where corrective ABC trends fail within the context of bigger trends going the other way. So we said that was too precious a secret, but over time, uh, it's been used to develop things that are, let's say, of a higher, that deserve a higher level of secrecy, of proprietary discretion. So I'm not going to give it all away today, but you're going to see some pretty good tricks that we do. Um, so over time, I became more confident with the system, and you have to realize that at this time we didn't have um, electronic day trading. When you executed a trade in the S&P futures, you were calling the broker who was calling the floor, and they were literally hand signaling someone in the pits to buy two contracts or four contracts or whatever. So it was kind of a chain of events that had to happen to trade the S&P futures. And you may also remember, if you're an old timer, that was not a mini contract. The a single point in the E-mini S&Ps was worth $500. So bloop 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 bloop, and it could be, and it happens that quickly, could mean you were out $500. So it was um, a very it was very harrowing, really, to learn in that way. But as I'm going to explain a bit later, you'll see that the learning process using some of the most sophisticated entry tactics that I've developed with the help of subscribers who have pointed the way uh, is well, it's possible to get in very cheap to even trade a stock like Amazon with an account of under $5,000. So, and I like to say that if you use some of the tactics that are possible with the mechanical entry and camouflage, both of which you're going to see in a moment, um, a bad month should mean losing, and I mean this literally, $10. I had a lot of trades wrong, but as you'll see, uh, you can hold your losses to, I mean, an absolute minimum, and a bad month should be more like I lost 10 or $20 just practicing. But the key to all trading, the salient feature of trading is that if something works for you in a small way, it'll work for you in a big way. So if you start practicing, let's say, the mechanical setup that I'm going to show you, but using single shares, you're an odd lot trader and you're using the mechanical levels, um, you can you can hold your losses really. You can do a trade and you'll maybe lose 30 cents, 12 cents on a trade. You're trading a single share and using a tight pattern of a cheap stock. Um, all right, so um, the evolution itself has really been a process of trying to stay a step ahead of the algos and other traders. We shouldn't think that anything that we know, anything that we learn that's particularly useful, will remain exclusive to us for a great length of time. And for a while, I did work with a fellow named Mike Barna. Mike is really one of the top trading system developers in the world. His R Mesa was the top selling E-mini S&P system in the world. And Mike evolved from what we would call black box systems to white box systems that generate trading algorithms on the fly. But Mike looked at my system for about 6 weeks and he came back and said, there's too much English major in this. I was an English major in college. Mike was literally a rocket scientist. He worked for Lockheed at one point, but he was also flying for FedEx at the time and developing these systems in his white box generator. So Mike said, "Yeah, I think you're gonna be able to do more if you do it manually, so to speak. Think like an English major." And this has really been a key aspect in the development of the system because, as those of you who majored in English or know English majors are aware, we only have maybe half of our brain functioning, the wrong half really for doing uh, IRA tunic type trade setups. But the thing is, all algorithmic trading systems over time degrade, the performance degrades. And even according to a world class guy like Mike, to get the algorithm to work as it did originally is a demon genius problem. So we, on the other hand, can see that something that was working is no longer working, presumably because other traders have discovered it. And I can say, well, we'll simply look for gnarlier ABCD patterns to trade, patterns that are not quite as obvious to the herd. And gnarly turns out to be very difficult to approximate algorithmically. So there's a lot to be said for trading with some instincts, and that brings me to the key reason um, for having a trading system. It's really to fix your observation point so that each day when you come to the market and you drop anchor in the same place, you're oriented. You sort of you're in a fixed place and you're just kind of seeing what sort of price action occurs. And if you have the system, a discipline system as an organizing principle, over time, your observations repeated day after day, week after week, month after month, will tend to take on certain nuances that will bring you the horse sense that you've always craved. And and you've wondered, I'm sure, are you born with it? Well, I can assure you that great traders are not born with anything like horse sense. It's something they acquire by learning from their mistakes. So the best way to do that is to start with a system or a systematic approach to looking at the market and trading it. And that is really maybe the only way that you can truly learn from your experience and particularly your mistakes. You're going to learn all the long lessons from your profitable trades. All right, so now let me show you how the system has evolved. These are two workhorse techniques that we use to get into trades. The first of them is a mechanical setup. And the mechanical setup, true to its name, uh, leaves you with practically nothing to decide. It is pretty much automated, and I'll show you exactly how. Here is a textbook mechanical buy in gold, and we have the ABCD pattern A, B, C, and there our D target is a little bit out of sight. But the way the pattern works is we're waiting for the CD leg. Here's C, and as it embarks on this ratcheting uptrend, it's in the CD mode. We wait for it to get just a little bit overworked. Um, and when it pulls back to the green line, we buy. So that is different from the Lindsay trade where we have an A, B, C, and we simply get in right there. Here we wait for more action, a higher high, and we wait for what amounted to a really vicious shakeout that brings us back to the green line. As I've subscribers have discovered, particularly in trades that I put out with Bitcoin, and I think we've only had one losing trade in 2 years in Bitcoin. The mechanical entry is particularly well suited to trading violent, really volatile vehicles. Why is that so? Why does the trade work? Well, the reason is that a good mechanical setup always should begin with a good strong impulse leg. And here you can see a very powerful, I mean, this is a gigantic move in gold, if you can believe such a thing ever happened, a huge rally in gold. These were the old days. All right, so we see in this amazing run up here an expression of very eager buying interest. So it's so eager that the traders can't wait for it to pull back too much. It pulls back a little bit and it gets going so fast. Remember, everybody's so stoked looking at this impulse leg. As soon as it embarks on what everybody thinks is the CD leg or the follow through leg, whatever they call it, they all jump on it and they're too eager, and that's why Mr. Market comes in with this rebuke here. He takes it down so hard that the last of them is shaken out here. They really get everybody who bought up here, 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 here. They get pulverized on this move down. All right. So when we buy there, we're really buying in a great place. We're buying after all the bulls have been shaken out brutally, and it gives us a beautiful trade there. Um, and there are a couple tricks that those who've taken the mechanical setup course are aware of. There's a uh, certain things we look for in the CD leg, but this is a pretty basic pattern. It's really a good textbook buy. So, and typically, the original hidden pivot method always put you into a trade with presumed risk reward of 1 to 3. In other words, you are buying the green line with the stop loss one level below that point C, in hopes of capturing a move 1, 2, 3 levels up to D. So your risk reward implicitly was 1 to 3. But the mechanical trade, the mechanical entry works so well, so consistently, that we really only have to shoot for 1 to 1, meaning we wait for the pullback here and we're only looking for a move to the red line to take off. Well, we can take off all the position, but if we're feeling pretty good about the uptrend, we might hold half the position for a shot at the secondary pivot, which is midway between P and D. And uh, but in this case, we've got a beautiful trade here, um, because we're getting in after the bulls have been pretty well shook out, and it's well, it's workable in many ways. Here, let me show you another trade in crude oil. Same thing. We've got a good strong impulse leg. It's not quite as steep as the one we saw in gold, but keep in mind this is a weekly chart, so this is one heck of a run up in crude, and so the bulls really get pretty jazzed, and they buy this thing up so hard that it takes a really nasty shakeout to bring it back to the green line, and we're just waiting there with a bid that, as you can see, worked out pretty well. Now, if we ascribe the evils and all our losses to a Mr. Market, there is a Mr. Market out there, and he really is kind of we're just looking at ourselves in the mirror, and it's a reflection of our fear and our greed. We refer to him as a Mr. Market, and we would all swear that he's really there, and he only cares about you. Very, very caring sort of demon. Um, and you'd swear that things that happen to you don't happen to anybody else, but they really do. But in this case, because the trend is so decisively bullish and everybody thinks, um, well, what's the difficulty about making money here? We simply buy, get with the uptrend. Well, you would think that Mr. Market, if he were as good as everybody thinks he is, his first goal, his primary goal would be not to bring it down to the green line, but to stop everyone out below C. I mean, believe me, all the bulls are getting out when it drops below that. So you'd think if Mr. Market were as evil and talented as is generally believed, that he could at least bring this thing down to here to crush all the bulls. But the problem with that, the reason why this trade works in the most violent markets, is because the impulse, like the buying interest here, is too strong even for Mr. Market to stop out that point C low. There are just too many eager buyers to get in, and that's why it works. So Mr. Market has to settle for just reaming a new orifice for all of the bulls who got on somewhat belatedly above the green line. All right, you can do this in reverse too. Here's a nice pattern in the E-mini S&Ps, and one of our little proprietary tricks, but I'll tell you as much as we never use the marquee high in determining these ABCD patterns. We use what I call the one-off, and this leg down has to follow certain rules, including exceeding that external peak to the left. But all right, so you put together what looks like a pretty good pattern, and a pretty good pattern gives you a pretty good shot at making money with a mechanical short. So here, same way, we've got this pretty nasty AB leg, a gingerly correction there, a lot of chop, and then it finally comes down to P. It even exceeds it a little bit. So we're looking to short it on the move back up to the green line. That is the mechanical short. We can do the same trade. We can do a mechanical trade if we get a rally, if it comes down to here and rallies up to the red line, or and also if it rallies to between this P2, the secondary pivot, and the D, which is unseen here, it doesn't quite get there, we can still buy a rally to the green line. So there are a few flavors of mechanical trade, but I try, as you may have experienced using any trading system, the simpler it is, the better. You don't want to clutter it with too many rules. And in this case, um, you can pretty much leave it at good, strong impulse legs, set up good mechanical trades. So that'll do you. All right. Now, one further evolution, and this particular setup preceded um, the mechanical trade, and I call it camouflage. And I mentioned it already in the context of um, our thinking. Let's not get in at X. Let's use the hidden pivot method to trade counter trend all the time. We'll get short at D rally targets, for instance. So um, as I mentioned, that's a pretty frightening thing, especially like if something's dropping like a stone toward a D target, and here you're instructed to just buy D, get in a D, everything will be all right. Well, rather than do that, um, we wait with camouflage not to buy D, but for our trading vehicle to hit D and then manifest an uptrend on the chart of smallest degree. So I'll show you that right now. But first, I'll show you how the camouflage trade, the setup would work with a conventional trade, with what I call a Lindsay trade. All right, so this first chart here, we see in the E-mini S&Ps a big uptrend that took place over many weeks, and then it came down to make what eventually became a point C low. And if we do the Lindsay trade here, we take A, B, and we take 25% of that, our entry price would be 25% of this AB leg above this point C, which turns out to be at 1923. So if we get in there and we put a stop loss below C, we have effectively about 33 points of risk, or let's call it $1,600. Now, if we get into camouflage mode here, what we do is we see that the first time on the 60-minute chart that the rally, what I've labeled point C here, is point A on this chart, or we can use we can use a smaller pattern. So I start with this nice A, and the first time it hits what would be the trigger price, the price that tells you to get long there, the first time it hits it on a smaller pattern is right here. So we wait for it to set up a small ABC, and we get in here at the smaller pattern ABC triggers at 1929.50. All right, that's your point X conventional Lindsay entry. Your stop loss is 1923, so your risk now is $300 as opposed to $1,600 in this way of doing it. All right, we can actually get the risk down even more. We zoom down to the 15-minute chart and we create an ABC pattern of even smaller degree, which has an entry, an X green line conventional entry at 1924.50 and a stop 4 points lower. So now we've cut the risk down to 200. Or we can come even down to the 1 minute chart and do it this way. The first time in over days that this thing hits that trigger price that we saw on the first big chart, that's where we start looking for our own little tiny pattern to use. So we see a subtle one here, a tiny A, B, C, and the entry price occurs at 1922 and a quarter, which gives you effectively a 5 tick stop loss, meaning $60 is what you're risking. So effectively, you're using you're sort of getting aboard the trade using the shuttle, a little shuttle here, a tiny ABC pattern, but with the hopes that you're catching a ride on the mother ship, that big pattern, which had 90 points of upside, let's call it an even 100 points of upside from your entry point. So, so, um, so you get sometimes the double effect, meaning you're taking the X entry price on a small pattern, and for some reason it takes off like a bat out of hell. We know, hidden pivoteers know, what the reason is. It's hitting this entry point that is signaled on the big chart as well as the small chart, so you have double propulsion at that number, and your smaller patterns are going to they're just going to deliver because the smaller pattern, remember, is within the warp of a buy signal that's been triggered on that big pattern. So again, you're catching a ride, you're using the shuttle to hitch a ride on the mother ship. So in theory here, you could have risked 1 point here to make as many as perhaps 100 points getting to the D target of the larger pattern. And one rule that goes with that, and again, I don't have too many rules, but I always encourage traders to take at least a small profit, take some money off the table early on. And you'll know if you've done that, that when you have a little bit of the house's money banked, it relaxes you. It puts you in that space where you just make better decisions. So I always suggest taking your deep profit here. You'll make a rousing couple $100 there, and you'll be left with just half of your position, but save at least half of that half for the big ride, that 100-point ride. And at the end, you can say, well, I made $10,000 on this single contract, having risked just 1 point on the initial trade. All right, I'm going to show you also, and this will wrap it up, a camouflage sequence, the kind of the things that go through your brain when you're doing another type of camouflage trade. And let me mention that camouflage can work as a standalone trading system. It's simply getting on the smaller charts to do the trades, but doing that when you've got a signal, when you've got a corroborating signal on a chart of a higher degree, of larger degree. All right, so it's best to look for these camouflage trades when the big chart says, hey, we got a trade here. All right, so in this case, the big picture, and the big picture isn't very big here, but I'm seeing a pattern A, B, C that gives me a possible midpoint reversal. This P is midway between C and a D target that's not shown here, but it's a good place to test the water, to do some bottom fishing speculatively with the tight stop. Now, recall that the old style, the unevolved style of Rick's picks, was to simply put your bid there and a real tight stop loss. But if you use the camouflage idea, that we'll start thinking about the trade when it hits our P downside objective and is ripe for a turn, we'll do the trade on a chart of smaller degree. So we come down to the 2-minute chart here, and we see exactly what we want to see here. The 1556 where we were, I'm sorry, the 1156 where we were looking for the turn is right about here. But after it hit that, it went a little lower, and it did what it did, which, as we discern, is it created a beautiful impulse leg, a good sharp single bar A, rallies here that went past one internal peak, one external, and a second external. That impulse leg idea, by the way, is very simple, and I offer a freebie on what the impulse leg is, how to use it. It's the simplest, most powerful tool I can give you, and it will really tell you when the trend is changing. But you're seeing the change occur in a chart of smaller degree where other traders aren't quite as aware of it. All right, so what happens subsequently? Um, you you pull back to a nice, good, clean single bar C, and lo and behold, you've got an ABC pattern that's so subtle here. We're on the 2-minute chart, and it happens so quickly that you can really do it in the conventional way, that the Lindsay way, which, as I mentioned, is rarely a moneymaker. In this case, it is, because we're catching a very subtle inflection of change here. So we get in at 1163. We put a stop loss below C, and and we take half off at P. Not much money, but because this low here is prospectively a major low, we're going to save a couple of contracts to swing for the fences, which, as you see, it was the fence was well beyond what we might have envisioned down here. All right, and one more thing I'll mention that I neglected to say when we were talking about the mechanical trade, was that all your entries are by limit bids on uptrends and limit offers when you're trying to get short. And that's the beauty of the mechanical trade. You're never stuck wondering whether you've been filled or not, because you're looking for it to come down to your bid, and if it exceeds your bid, then you've very likely been filled. And if you combine that idea, you're only doing trades, you're only entering trades on limit bids, um, with single lot trades. You'll be trading one share of Google, or the old Amazon 2000. You'll get a lot of movement there, and you'll get to practice, but you'll never be risking much because you're just trading the tightest little patterns. And even in a $2,300 stock, as Amazon was until recently, you're looking at a little pattern where your entry price may give you implicitly only 11 cents of risk per share. So you can trade Amazon all day long, and it's a good way to practice, because when you're trading a giant killer like Amazon, and you find, hey, I'm making a steady $12 a day doing it, you have everything you need to start scaling up and then to be trading 100 shares of Amazon, and who knows, eventually 1,000 shares of Amazon. So you really can practice. You can imagine if you're doing mechanical trades, camouflage style, with a $13 stock, you can trade all day long, and you'll be up $1.40 or down. But if you find that 8, 9 days in a row you made $1.40, you made $3.10, made 2.20, you're ready for, if not the big time, you're ready to step up to 100 shares. Um, all right, another one more instance of camouflage. Um, we see a lengthy correction, and the first move, everybody missed it. We had that big move, and all the traders are kind of sitting on their thumbs. But if you wait for the subtlest manifestation of what we're looking for, a good ABC pattern, an A, B, that impulses above 1, 2 prior peaks, we get our entry right there. So again, small, think small, and you're going to find you're winning more consistently. Concerning the impulse leg, um, I'm not going to get into the subtleties of what this particular chart shows, but I always tell when the discussion in the chat room turns to the oohs and ahs over how Tesla is the destroyer. It's Godzilla. Even Tesla is just its impulse legs. And when we see that in different time frames, it really sort of tames the beast. We shouldn't be afraid of Tesla simply because it moves around a lot. We're capable of scaling things down to very manageable. Um, this is um, a another instance where we had a perfect camouflage setup, but it didn't take off, and that's telling you you can trade against your own ideas. In this case, and if the uptrend ain't happening, you better believe that it's a good trade. It's a good time to get short. And here's another. Finally, I guess recapitulating the mechanical trade. This was on a Sunday night, and we had a very steep run up here. The bulls get really ahead of themselves and they get slam dunked on a pullback to the green line. You buy there and you can see we had a nice winner. All right, just a brief, this is a somewhat evolved concept too. I call it the counterintuitive trade. And the counterintuitive trade is the predecessor to something I'm not going to talk about today. You're going to have to pay to get in to see that show. But the counterintuitive trade is a trade where we've got an ABC pattern, but by the time it comes down to here, everybody's thinking, oh God, is it going to break down beneath that low or not? So while everybody's sort of thinking bearish, we have the presence of mind to do just an ordinary bullish pattern, A, B, C, and get in there. It worked just fine. We could have done it mechanical style, buying there. Um, another three patterns where the counterintuitive worked out. Um, or three charts that show the sequence. This thing's just coming down, 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 and we expect right here that it's just going to break below that low. But if we presume otherwise and set up a bullish ABC, you can see in this final chart that it worked very nicely. All right, so to sum up the state of the art tactics, um, that we're using now, I did mention the mechanical setups are really the workhorse, and we do that. I do that in my real life trading, and so do my partners. It's just a good way to get into a trade. But we're combining camo, RABC, the reverse pattern trade, and mechanical in one single trade. Um, and I mentioned, I see I've got this comfort zone here twice, but to go to item 3, conventional setups, we can still use the point X green line conventional entry, but we're finding that it has to be with very, very gnarly patterns. In other words, ABCs that really no one else sees. And I already explained the odd lotting mechanicals. It's using the mechanical setup to trade single shares of Google or whatever you want, very volatile, vicious stocks, and to have no fear of those stocks or of losing significant money. Um, and another thing that we're adapting more and more is using hidden pivot patterns. All of these tricks, mechanical trades, counterintuitive RABCs, reverse pattern trades, virtually all of those things can be applied to trading options. And I'm going to tell you something that no expert would agree with. He'd say, oh, that guy's full of it. I'm going to say that if you use the hidden pivot method, some of these entry setups that I've been showing to trade options, you can leapfrog people who have written books about options, people who have been trading them their whole lives, and you don't have to know nothing. And I get to say that because I've been trading them myself for 45 years. I did spend 12 years on the options floor. I've written the striking price for Barron's. I've taught a course alongside Larry McMillan, author of, I guess, the Bible of options trading, or what one time it was called options as a strategic investment. So I qualify as a real options expert, and but an English major too. And over time, I've just come to the realization that these hidden pivot patterns work. You don't have to incorporate gamma, theta, delta. The chart of the option itself, ABCD pattern of the IBM April 17th, 140 calls, is it discounts everything. It has volume in it. The chart even knows that the scumballs at Goldman Sachs are going to come in and front run one of their customers with a sale of 10,000 options. That's all in the chart. You don't, and no model, Black-Scholes, options research, none of them, they don't even know about that. They don't know about it, but the chart does. So I think that you really advantage yourself over even the most knowledgeable pros just by simplifying, going to simple ABCD patterns and looking at the charts of various option series. All right, finally, this item I've repeated twice, exploiting the discomfort zone. The discomfort zone comes from the idea that no good trade is going to happen in a place where you're looking and you think, oh boy, this looks like duck soup here. I'll just jump in, it's a winner. Chances are, if you're thinking that, it's just some trend that's going so bonkers, everybody's bullish. And when you're seeing it, everybody else is seeing it, and it's about to turn diabolically ugly. So, so the idea here is that you should be looking for trades that occur where most other traders are thinking, God, I better sit this one out. Let's just wait till the dust settles. And of course, if you do that, you're like every other trader, and they're all looking at the same highs and lows for the dust to settle, and it becomes a game of second, third, fourth, and fifth guessing each other. So if you could dispense with all that, not even deal with the herd, and just think it's shooting up, and everybody's thinking, what the hell is this thing doing? This crazy spike caused by Bozo Pal or whatever news is on the tape. If you could dispense with all that and say, here is where everybody is feeling most uncomfortable, and use that intuitive fact um, to fashion yourself a little trading pattern. That is really the state of the art. And I say intuitive, but not to give away too much of the proprietary of the store, but it's not intuitive. We have empirical ways of getting to the heart of the discomfort zone. So discomfort zone is a key concept now in certainly in the reverse pattern trades, but also in mechanicals and and the camouflage trade. So you can even apply discomfort zone trades to think if this pattern is a perfect ABCD, it's too comfortable. We're going to trade exactly against it. We're going to short it when it hits that X trigger point that says you should be a buyer. So, so this discomfort zone is it's really it's a great thing, and it's really a point of emphasis in the Wednesday tutorial sessions, which are part of the package that I'm about to offer you. I'm going to say just one more thing. So much of what I've learned has come from my subscribers. The Rick's Picks chat room, I think, is the best trading room in the world. It's not a Tower of Babel where everybody speaks a different language, a different technical language. It's not an Elliott Wave room where you ask 25 guys, well, what is this corrective or is it impulsive, or what's it going to do? They have 25 different opinions, even though they're all Elliott Zen masters. In the Rick's Picks chat room, many of the traders, most of them speak the same technical language, and this is a huge advantage. We get a lot of good tradable ideas in the room, and everybody's sort of tuned to the same frequency. So, and they're friendly too. Over the years, I've always encouraged a spirit of helpfulness in the room. So the Rick's Picks trading room, there are two rooms, a coffee house for anything goes discussion, but a trading room for trading timely trading ideas. It's a great room. But from my subscribers, I've learned about the counterintuitive trade. It originally was a woman named Monica, a new subscriber, who had this idea that trades that were treated as an uptrend as uptrends, where C was actually lower than A, were a good starting point, and she turned out to be very right. It led to the reverse pattern trade. I've got many guys in the chat room are really going after the meat of the options game, which is not buying them but selling them short. in our case, naked short, and we've had people report profits of as much as $30,000 a day. And a lot of the trades go out in advance. These aren't people saying, "Oh, I had a great day. Just believe me, I did." These are people who put the trades out that made them that 30 grand during the course of the day. So again, a great room. Um, all right, this is a trade I did this morning with my partner, Mike Schur, and the market here's 9:30. This was the opening, and it came down, and he wanted to buy the red line. And the way it pierced the red line, we already know that price action at P is predictive of, and once it pierced P, I said, Mike, no reason to buy. We found what I felt would be the prime spot in the discomfort zone, 3741 and a quarter, or 3741. I didn't calculate it. I eyeballed it, and it turned out to be a point off a single tick off this morning's low. And the initial profit, as I mentioned earlier, is just the ride from the green line to the red line. It's only 3 points. It's six for two contracts, so that's a $300 trade. And out of the third contract, there is an additional $400. And then we kept one to swing for the fences. That's how the trade would be treated. All right. So all right, a little bit about, let me tell you about the package that my marketing director, Dave Williams, has prepared. If what I've uh, presented today is of interest to you and you want to learn everything I know, and that's what I consider my job is to bring you up to my level. There's some traders who've come up to my level and surpassed me. They're just better traders than I am, but they use the same ideas. But I am committed to every student to bring that student up to teach them everything I know. Um, and the best way to do it is to take some of the courses that I offer. There are really three of them right now, and this success bundle packages them all. The first is uh, the classic version of the hidden pivot course. This is a 2011 version of the course that has a beautiful refresher for those who know all about hidden pivots. It's got the basics. It's got everything you need to know, including some visual tricks to spot good patterns. Um, and I've already explained why the hidden pivot method evolved from fatally flawed genes, the Lindsay pattern that never works, rarely works. Um, you also, in this classic version of the Hidden Pivot course, find out detailed information concerning the impulse leg, and you'll have that to use no matter what trading system you employ. Um, and why we use the marquee highs and lows. And you're also getting some detailed information there on the midpoint pivot, whose importance I explained earlier in this presentation. And finally, this classic version will give you a means of achieving consistent profits. So that's a $497 value. You'll also get the mechanical trade system course, and you could jump into this without having taken the basics, but you'll get more out of the mechanical system course if you do the basics first. But this is the very specific detailed information you need, the proprietary tricks to get into the patterns that are going to work for you. And once you've taken this course, you'll see how you can select trading vehicles that can fit a relatively small trading account. And it also has some discussion of discomfort zone trading. Um, I mentioned this feature here about avoiding slippage with mechanical entries and leapfrogging what you would ordinarily have to learn to trade options successfully and some other vehicles. And finally, putting it all together, you learn how to read the markets so that you don't have to rely on others to tell you what's going to happen. So those are two elements of this success bundle. And I'm also going to throw in a 6 month subscription to Rick's Picks. That's a $227 value, and you'll find in the daily Rick's Picks that there are touts that I update 24/7, many of which are actionable and which are followed in the chat room. You'll get real-time notifications when I put out a trade or an update that's tradable, and you'll have access to the chat room 24/7. There, as I said, great traders in there, and some of them are night owls. You get invitations to all the live online events, including request sessions, which are very popular, and um, you'll be uh, uh, frequently. I'm in the chat room a lot, and I'm always trying to post things that are useful, and that includes some of the thinking of some of my colleagues. I exchange letters with a bunch of guys, some really good ones. Bob Hoy, for one, and uh, Garrett Jones. I'll always give you a piece of Peter Eliades' minds. These are all good people to follow, or to use as an adjunct to Rick's Picks. But I would caution you against making it too complex. I really try to keep things simple, and I tune out all the experts too. Ross Clark, who is Bob Hoy's technical guy, chartist. He's one of the best in the business for my money, but I stop short of seeing what he's thinking really, because I have my own thoughts, and my objective in bringing you to Rick's Picks is to bring you to the same place, is to allow you to have as much confidence in your own judgment as you would in the judgment of a quote expert. Um, so the touts try to cover a core list of stocks, options, not sometimes we do options trades, or what I call jackpot bets on Fridays, um, mini indexes, gold, silver, but the core list covers things that are that have the widest trading interest. Um, and Also, included in this package is 6 months admission to the Wednesday tutorial sessions. During those sessions, as I said, I actually pull the trigger on trades just to show you here, okay, this is a go, because I know that's really what you want to know. Um, and I do encourage people who come to these sessions to come ready to trade, and it's not unusual for someone to say that during the course of a Wednesday session they made back the price of the flagship course, $1,400, or the price of the mechanical course, or whatever. Um, because we do, I can't even remember the last time we had a losing trade in the Wednesday sessions, or if we did, it's maybe on the order of maybe one loser out of the last 15 trades. Um, Past performance is no guarantee of future performance. I have to tell you that. Um, all right, so Rick's Picks, you also get charts posted in the room all the time that give you visual instruction as to what you might want to do. And I'm there, as I said, as much as I can be to answer questions. And you'll know from anybody who's been in the room for a while that I'm pretty generous with my time in there. Uh, I try to answer every question that's posed. Um, and You'll also have access to the archive of recorded lessons. Uh, I would say act soon, because I'm going to scale back the availability instead of leaving out archive Wednesday sessions that stretch back years. They may be on a time limited basis soon. So the sooner that you subscribe, the easier it'll be for you to go way back in time. But of course, the most valuable material is the most recent. And finally, you'll receive uh, 7,000 annotated charts. These are not meant to study. You just simply flip through them, and you'll discover that they kind of linger in the back of your mind, that you'll be able to look at charts and think, I've seen this before. But if you just flip through them, 7,000 of them or the last 1,000 of them, they're going to etch uh, a little pattern in your trading brain that you're going to find most useful. These charts are annotated, so in other words, they're not just charts with winning patterns, but the ways in which they've been annotated will give you insights into the thinking process that selected out those particular patterns, of which you'll find many examples of mechanical camouflage and reverse pattern trade setup. So if you were to buy everything separately, that'd be $1,671. I'm going to trust my marketing director's math, 1671. But if you purchase the whole package together, it's $997. And you can sign up simply by going to rickackerman.com/evolution. And again, 997 bucks for a package that I try to be as honest as I can about the values that I assign here. Um, and it is a 1671 value for 997. So again, to sign up, just go to rickackerman.com/evolution. And let me one more thing. Um, if you wait a second here, let's see. Um, and there was one more. rickackerman.com/truth will give you all of the Trustpilot reviews that have been posted by mostly satisfied subscribers. There are a few dipsticks in there, but you can judge for yourself whether their reviews are meaningful. But again, rickackerman.com/truth will give you a pretty good perspective on what subscribers are saying. But to sign up for the package, it's rickackerman.com/evolution. And now I am going to take your questions, and I'm trying to think of how I arranged with David. Oh, there it is. Slash. Okay. Um, I can't remember how I arranged to take questions, but let me fish around for an answer here. Um, let's see here. I'm going to shut that down. And let's see. I will go to. Uh, all right. Oh, I see. I'm in between so many things here. Let me shut this down, and I will see what's on you guys' minds. Um, let's see. All right, questions. All right, here are good questions. All right. First question from Stan. Now, I'm not taking questions on what I think about different stocks. Okay, so Stan will have to come back another time. Um, can't hide your video once you start. Okay. All right. Let's see. Charts. Uh, we see. All right. These are pretty much in the beginning what people are seeing loud and clear. Cannot hear Rick speaking. Bertha, my fault. I wish I could get to some meaningful questions. Some Elliot screen froze. These aren't exactly the questions I was hoping for. All right, Adrian, at the end of the presentation, can you please address one question? Is the full course of Hidden Pivot Method still released today for someone who's already bought the mechanical trading system and the camouflage technique? That's a good question, and I did discuss this with Dave Williams, my marketing guy. And yes, you can take the even if you've taken the mechanical course, the the full course on the hidden pivot method. This wasn't the one in the package. The one in the package is what I call the classic, like super duper basics course. There's a $47 course on the basics, but this one that I'm offering with the package is kind of the basics on steroids. But the what this questioner is referring to is the flagship course, last recorded in 2019, but very current in terms of giving you detailed information for all 6 type of entry setups I use. So if you want to take the flagship course, um, and you've taken another course, contact me at rick@rickackerman.com, and I'll give you some sort of price reduction for having taken one of the mini courses. All right. Um, Dean says audience can still not see your cursor move. Sorry about that. And all right, I see a few of you couldn't see the cursor, and that's just the scourge of digital life, and it's pretty big on my chart, so I'm sorry for that. I look at it and it looks plenty big, but I guess you guys see a kind of reduced image, so my apologies. Um, all right, Ali said I bought Hidden Pivot years ago. How can I watch it again? You can watch the 2011 version of it free, Ali. So just contact me at rick@rickackerman.com, and I'll explain how you can do that. All right, Adrian asked, does this package include everything in the original Hidden Pivot course? Um, it No, as I just explained, it doesn't. It's a 2011 version, which gives you camouflage, but not a couple of the entry methods, the reverse ABC pattern, the the it, it's there are a couple things that are missing there, Adrian. But what you're referring to, the original Hidden Pivot course, it's a 2009 version that's very complete and revealing as to what it discloses. Jamie asked, will you help on choosing trading platforms, especially in Canada? That's a question that is best answered in the chat room. We've got many people using different platforms. I would say the one I use, TradeStation, is not exactly the most popular. Thinkorswim seems to be. So that, and I don't see much mention of Ensign anymore. But as far as using the hidden pivot method, it doesn't much matter. Um, it doesn't much matter which platform you use because I don't use any bells and whistles. I don't even have volume bars on my chart. So any electronic platform that will give you charts with price bars, that'll be fine. Um, would this be good for a beginner trader? Absolutely. The mechanical course in particular, mechanical method, will give you, I think, the quickest path into trading. If you've never traded at all and you're scared to death of trading and you think trading is for other people, I'm never going to get it, you should definitely take the mechanical course because I think that you can, if you're really diligent and you come to a couple of the Wednesday sessions and you review a couple more by recording, you can be on top of trading in perhaps 4 weeks time or even less, depending on what your other experience is. So yeah, the mechanical system, it's very easy to learn. There are relatively few rules. It's pretty forgiving. Like even if you don't follow the rules or the pattern doesn't look ideal, the mechanical entry is very forgiving. There's a lot of leeway there for error or lack of knowledge, and your trades will still work. Uh, Roger asks, where can we review what you just offered us today? Well, I'll review it one more time, but again, it's uh, the package. Well, I'll show it to you again shortly, but it's rickackerman.com/evolution, I think it was, right? Um, how much would I need to commit each day to learning? Um, I take an hour to get you started. Um, once you're actually trading, as I did this morning with my partner Mike, we're on this thing for just 10 minutes to make actual money. So once you've learned, you really don't have. It's not much of a commitment of time. Um, can I make money as I learn? most definitely, and I did explain how even trading a $2,000 giant killer like like Google, you can just cut it down to size. You can do single lot trades with mechanical setups, and you can practice on a $13 stock, where on a big day you might lose 60 cents. I mean, on a bad day. So only you can really determine how quickly you're going to go. It's a very deceptive thing, trading. One thing that many traders would say, I've heard it 1,000 times myself, is if I had my commissions back from last year, I would have made money. Well, no one who says that appreciates that if you consider the 50-yard line dividing profitable on average from unprofitable on average, it seems easy. You just a little bit more and you would have been profitable last year. But I can assure you that the getting from in the in the red to in the black, that short distance there, even to, so you're averaging, $40 a day in profits. That's one of the biggest steps you can take in any job. It's enormously difficult. It's almost like the example I use is the milk cartons on the Carnival Midway. You got three pitches. You take your first pitch, it scatters two of the cans, but the two of the milk cartons. But we know from experience that the Category 5 hurricane is not going to knock that third can over. So it's a bit like the Carney Midway. You're thinking, geez, if I had my commissions back from last year, I would have made money. That is a very big step from being able to lose, $50 a day, which anybody with a hole in his butt can do, to making $50. That's an enormous step. It's a big, not necessarily in terms of time spent, but in terms of the difficulty that the typical trader, especially one without the kind of discipline system that I'm offering, spends in the learning process. Um, Dean says, great presentation. Any recommendations on data suppliers, brokers, cost for trades? Again, great question for crowdsourcing in the trading room. Um, let's see. Question: if they've taken a hidden pivot course, the access to the what we call the classic uh, will be built into your dashboard. You can already access it there. All right. Dean says, I'm not trading presently, perhaps in 2 to 3 months. Jamie says, TradeStation not available in Canada. Don't feel too bad about that, Jamie. I mean, sometimes I curse TradeStation. It's not a bad platform though, and their options platform is particularly good, if sometimes a little bit uh, fragile. Thinkorswim not available in Canada. I don't know what's so. All right, you're going to have to work that out yourself, Jamie. It's great that too bad all these things aren't available. Um, so just ask your questions in the room. Um, Everett says, I would not have used the pattern on your screen for RABC trade. Uh, would you have used the bigger one after? I don't want to go back to that. Uh, the the package again is if you want to get the for $997, the $1,671 package. It's rickackerman.com/evolution. All right. And another question: you ever try to put the mechanical system into an automated software format? What happened when you did? Um, I it could it's rules based enough that it could be automated. When I was working with Mike Barney years ago, he said, it's just the rules aren't firm enough. But for these evolutions of the hidden pivot method, there's definitely enough meat there for a rules based system. So yeah, you could automate the mechanical trade and improve on it. I'll work with anybody who wants to do that. Um, will this program work on low price stocks? It doesn't matter what you're trading. You can trade a penny stock, you can trade a $2,000 stock. the patterns and the entry setups work the same way with certain variations in liquidity. Um, Brian, my Catman, my system administrator, mentions there are numerous platforms that a hidden pivot pattern can they can be used to draw a hidden pivot pattern. Thinkorswim is indeed available in Canada. I use it. Mentions Bill. Another question: do options work better or higher price stocks than low priced? I don't know. Uh, Thinkorswim is available in Canada. You just need to open an account of at least $2,500. I've checked. Mike says on platform questions, some brokers are paid for order flow and stock trades to the trader are commission free. Yeah, I've got one of my best buddies. He's an options trader, and he he's found a little niche to exploit. You know, you see these really wide. There's 20,000 contracts bid for at 80 cents, and there's 80,000 offered at $6.10. Well, it turns out there is a place between that spread where the machines want to trade, and my friend knows how to find that spot. And but he curses the payment for order flow is about the most anti-customer rule that the regulators have ever allowed. Um, all right, and let me show you once more the slide with the URL. This is the package of www.rickackerman.com/evolution. Again, $1,671 total retail. Yours for $997. Um, so let's see if there are no further questions. That will wrap it up. Kevin says 1,000 with 4 exclamation points, although I'm not quite sure what that is. I hope that that's how much money you made. Uh, Digressing from this presentation. Anyway, it's been a real pleasure for me, as you must have sensed, to have you here and so attentive today. And I hope that you find your way to the best things that Rick's Picks has to offer. This package certainly gives you everything you will need to get trading profitably, but there are other pathways you can take. If you have your doubts, be sure to come in the chat room and just ask around the neighborhood. Does how you guys making money? You know, is Rick any good? Does he has he taught you anything worth anything? So you can ask those questions. I would encourage you to ask them if you're skeptical at all. I had someone. I do offer one-on-one consultations at $400 an hour. And a fellow who took that session yesterday sent me a nice note, and he said after coming out of that session, learning what he did, and he was fairly experienced already with the hidden pivot method, but the consultations are really intended to help you sort of break through to a new level. So he yesterday coughed up $400, and he sent me a note saying given his own experience, it's like how could anybody who loses steadily, who's lost $10,000 or even, and this has been reported in the chat room, $100,000, how could they not spend $400 for all of the things that he was able to get out of our consultation yesterday? So to those of you who are already hidden pivot experts, I haven't had a single complaint or request for a refund from anyone who has taken the one-on-one consultation. It's available even if you haven't taken any hidden pivot courses. But again, the best way in, the cheapest, most efficient way to get everything you need to know from Rick's Picks to get trading profitably is this package that I'm offering you today, rickackerman.com/evolution. So that's about it. And again, thank you very much for your kind attention. I really enjoyed uh, your. I enjoyed this session very much, and I hope to see you in the chat room. Be sure to say hello if you get there, or if and when you get there. So you all have a pleasant good day.